Hi class, and welcome to problem 15-5. And to make this problem easier, I created an amortization table for the lease. I just did it all the way out to the date of when the last lease payment was made, and of course this will be adjusted. I'm not going to adjust it at this time, but we're going to probably only be using the first few payments here, okay? So here is what we have for problem 15-5 on page 913. Warner Chemical Inc. leased a protein analyzer on September 30th, 2013. The 5-year lease agreement calls for Warner to make quarterly lease payments of $391,548. So that's 5 years. Payments are made quarterly, so that's 4 payments per year times 5, that's 20 periods. The interests are payable each on September, December, March, and June. Okay. With the first payment being September 30th, 2013 for that amount with no interest. Warner's incremental borrowing rate is 12%. Depreciation is recorded on a straight line basis at the end of each fiscal year, and the useful life of the equipment is 5 years. Okay, so like I showed you earlier in the problem 15-3, we're gonna do this right here. Okay. So the requirement 1, we're going to calculate the present value of the lease payment. We're going to take $391,000 because that's our lease payment times our factor. So if you look on table 6, the present value, I'm going to write here, present value of an annuity due of $1. Our number of payments is going to be 20 payments because it's quarterly for 5 years. Quarterly, which is 4 times 0 times 5 is 20. And interest will be 3%. The annual interest is 12% divided by 4 because we're going to make payments 4 times a year is 3. So therefore, our factor is going to be 15.32380. So we multiply that 391,548 times our factor 15.32380. We should come out to $6 million, and wanted us to round it to the nearest dollar. So it would be $6 million, which is what we have here for our outstanding balance of $6 million. Okay. All right. In requirement 2, what pre-tax amounts related to the lease would Warner report in the balance sheet at December 31st, 2013? So remember that the balance sheet reports liabilities and assets, so we're going to have to do 2 different calculations. So let's do the asset first. Well, let's do liability first. Okay. Let me just cut this. Oops. There. Okay. I'm just going to put this here. Liability at December 31st, 2013. Okay. So the way we would calculate this is we would take the liability as of December 30th, 2013 of $6 million. Okay. We're going to, remember, as of September 30th, 2013, reduction. Okay. That reduction comes from that first payment that we made here. Okay, we're going to take that, subtract that, and we also did, as of December, we also made another payment. in the amount of $223,904, 2,023,294 of a reduction. Okay. So my December 31st, 2013 net liability for the lease is going to be that $6 million subtract the 2 payments that we made, and what I would calculate, what I would report as a liability is 5.385158. Okay, that's for the liability. Now for the liability, excuse me, now for the asset at December 31st, we'll do the same thing. Our initial balance as of September 30th is that $6 million again. Okay. Then we would just subtract the accumulated depreciation at December 31st, 2013. So our December 31st, 2013 asset would be, and let's go calculate the depreciation then, okay? All right, so for the depreciation calculation, it's going to be $6 million divided by 5 years, because it's that straight line, times, there's only 1 quarter have passed, so September, October, November, December. Okay, so only 1 quarter passed. You can do 4/12 or 1/4. Okay, that should equal 300,000 for depreciation. So my asset for the lease will be 5.7 million. So that's requirement 2. Okay. I'm going to put a page break right here. A page break, but I'm going to freeze my panes right there. And see if I can find it again. There we go, freeze panes. Okay, so if I freeze it so we can see this area up here. All right. Let me go ahead and highlight the answers so that we know what we were trying to calculate in each requirement. Okay. All right. Requirement 3. In requirement 3, what pre-tax amounts related to the lease would water report in the income statement for the year ended December 31st, 2013? Okay, so income statement will report interest expense. So we have to look at the September 30th, 2013 interest expense. Okay, and that interest for September 30th is 0. Okay, 0, no payment, no interest payments for that first payment. As of December 31st, 2013, the interest payments were $168,254. Okay, so my interest expense total is that 168,254. Okay. I also have to record depreciation expense. Okay. And my total depreciation was 300,000 from where we calculated from here, okay, for December 31st, 2013. So my total then for total expenses would be this amount here, the $468,254. Okay, requirement 3 is done. All right, so requirement 4 then. It's asking what pre-tax amounts related to the lease would Warner report in the statement of cash flows for the year ended to December 31st, 2013. All right, so what they would report is the $6 million as an investment in the non-cash investing and financing activities section. Okay. And also the details in the disclosure notes to the financial statements. That's for the lease itself. Now, for the lease payments, in 2013, they made 2 lease payments. These 2 here, which equals $783,096. So, the $783,096, which is basically that $391,548 payment times 2, because they made 2 payments in year 2013, will be divided into the interest and principal portions. Okay. So the interest portion, which is basically the $168,254, hold on here, let me just, okay, which we calculated here, above here, will be reported as cash outflows under the operating activities section. Okay. The principal portion, okay, which is basically the $391,548 plus the $223,294 would be reported as cash outflows under the financing activities. Okay, so that's what we have then for requirement 4. And also just take a note that by the indirect method of reporting cash flows from operating activities, we would add back to net income that $300,000 depreciation expense, since right here, depreciation expense, okay, that we usually add that back under the indirect method. It's really the $300,000 depreciation expense, it's actually a reduction of cash, and the $168,254 in interest here That's interest expense that reduced net income, actually did reduce cash, and the interest portion of the $783,096 cash lease payments. So for it, no adjustments to net income is necessary. So basically, that's what we have then for problem 15-5. This amortization table wasn't required. I just made it so that we can better understand where we're getting our numbers from. If you didn't make this amortization table, you would have to make these calculations on the side. I thought that that might be way too difficult to show. So basically what I did was I did the amortization table and then did my interest journal entries based off of the amortization table here so they can see it clearly. Now you can do the same thing when you go and do your practice problems or your homework problems. It would help you tremendously. Once again, this is it for problem 15-5. If you do have questions, give me a call or email me.